managing editor, BTTV. On Business Today, I'm Sakshi Batra. Welcome to the show,
Thank you
Siddharth.
so much.
And today we are going to be discussing the most important, the biggest news of the day, the Ukraine-Russia crisis, which has escalated now. There is a war-like situation. Russia has sent troops to the eastern part of Ukraine, and we've seen the impact of this on global equities, Indian equities, and on oil prices as well. To understand how is this going to be impacting all these different segments and Indian investors as well, I wanted to understand first of all on the markets front. We've seen 1,000-point cut on the Sensex. How is our market getting impacted with something that's happening in Ukraine and Russia? And what would you say to all the investors who've been panicking all day?
Well, very clearly for the market, the Ukraine-Russian conflict is a matter of concern in the short term, Sakshi. And I would say that if you look at the overall trajectory of the markets, the defining theme in the past year or so has been surplus liquidity finding its way into markets like India, and you've seen the kind of price upsurge all across.
Yes.
The second theme in the Indian market was the theme of the tech IPO. And I think that theme has run through its natural course, and we already see a reversal in that.
Yes.
From a point of the price that was discovered through the book build process, and then eventually what happened. So I think the tech IPO theme is more or less over, frankly.
Yes, yes.
There might be small pockets. The third major theme for the market is the great Indian IPO, as we have been calling it, which is LIC going public with a relatively small size of a float, but it is humongous given the scale and size and complexity of the life insurance corporation. I think the markets are going to be tested from an overall appetite perspective in March when the LIC IPO happens. So, in response to your question, what happens between now and then? The decline that we have seen is perhaps in a response to the nervousness and uncertainty of how it will impact. Now, what are those impacts? I'll just quickly say, one, on the oil account.
Yes.
That's the biggest impact. Let's just go back to a day before the budget, eve of the budget, which was 1st February, 31st of January. From then till today, roughly 20 days, and oil prices have gone up by $20. $20 in 20 days. Now, if you see such a sharp increase, what did our policy planners mention? The budget doesn't take a specific number into account. The economic survey gave a number, and you know that that's $75. So we are already touching $100. The fact is that oil will once again score a century very shortly. And that directly exposes India and a whole lot of downstream sectors. And the biggest impact is on the middle class household budgets because it will feed into inflation, and it also adds to the overall cost of transportation in the economy, not just in the personal mobility segment, but for the railways, for our trucking segment, and for passenger transport across buses. And look at it from a broader COVID recovery perspective. We were just kind of getting out of things.
Absolutely.
There was Omicron, and I think Omicron, touch wood, I think we have dealt with it because of the high levels of vaccination. And then you have Ukraine coming in. So for the market story for newbie investors would be perhaps this is their first test to understand that the markets are not just driven by domestic factors. They are not just driven by fundamental valuations of stock and price to earnings and the ability of that company and its management to do a good operation. Markets are subject to wild swings, intense volatility, due to factors that are external, third party, fourth party kind of factors, as we see playing out.
What about the petrol and diesel prices, if you could explain, because they have...
Well, that's a wonderful question, Sakshi, and we here at Business Today have been alluding to that. $20 in 20 days is not the only story here. The second part of the story is that close to perhaps 110, 115 days back, it's almost, it's going to be 4 months very soon when we saw the daily price increase or decrease, which is the daily price movements by crude oil companies, by our oil marketing companies, beg your pardon, that stopped. Oil marketing companies, Bharat Petroleum, Indian Oil, have not raised prices since that period.
Almost 100 days or something.
In fact, perhaps more than that. So what does it tell you? It's very clear that the next trigger on that front will be the 7th of March. As I've been saying in the other show, that the 7th of March, the night or the day afterwards, is likely to be a day when the pass-through of that entire price pressure that has been built up is going to come through, because there is no way oil marketing companies are going to close this financial year with one full quarter of no price pass through onto consumers, especially in an environment where crude oil has gone up by 20%.
Almost nearing its
Well, it's a 25%
70.
increase in less than 22, 23 days. There is no way they can absorb it. The only reason it's not happening is because you have 7th of March, which is the last day, and 10th of March is counting day. We will get to know what is happening. That's why I always say that the political economy is extremely crucial to pricing of petroleum products and their impact on India. It is short-term relief. When it started to happen, we were amongst the first to notice this trend and to talk about it. And we kept saying that, listen, this is temporary relief. The moment this phase of elections is over, bam, it's going to come back. And I didn't know that crude oil would go up by $20. I thought there would be greater sanity in the market, because see, this is not a war in the OPEC countries. This is not going to destabilize global supply lines. Because of the increase in crude oil, US shale gas producers, shale oil producers are back in the reckoning from a valuation point of view. So I mean, it's a bit of
fresh sanctions from other countries to Russia and the supply.
That could impact us from a defense perspective, because the nature of Indo-Russian trade has changed in the last 3 decades. There was, of course, before the 90s, we were very significantly dependent on with trade with Russia. From that, we have broadened our trade basket. Russia does not account as a major trade partner currently. We have a much larger trade with China, for example, obviously. I think we will see, if these sanctions inhibit the ability of Russian companies, especially in the defense industrial complex, to work with Indian counterparts, because a lot of our equipment, 60-70% by rough estimates, is legacy Russian military equipment, and that needs constant servicing, spare parts, and a whole lot of other things. That could be impacted. And remember what happened around the S-400 missile system, anti-missile system last year. There was even talk of US warning us, and I think we managed it at the diplomatic level. But if hard sanctions happen, it is definitely going to impact us. So I see broader impact coming in on that front, but the immediate impact is definitely crude. And I don't know, it is set to score a century, and obviously one hopes that it doesn't go much beyond that, because this is not a century or a double century that any of us want to look forward to.
And what would you say to calm the nerves for all the investors who've been panic selling throughout the day today? FIIs have pulled out 51,000 odd crore rupees between January and February alone. And we've been seeing the impact of Fed rate hikes, inflation on the other hand, and now this comes suddenly.
So we don't do advice. There are professional advisory firms and people who do that. But from a comment, from the question that you asked, what is it that average investor should do or think in the current circumstances? How should he digest all of this news that comes in? Point number one, this is a lesson once again, and the markets keep teaching every participant a lesson every few years, which is that the markets are the ultimate definition of risk. If you're only looking for stable, assured, risk-free investment, then the markets are not for you. The second is, so this black swan event like Russia, Ukraine, and other than that, there is inflation. And what does inflation do? Inflation changes the priorities that a good investor should have vis-a-vis debt and equity products. Inflation has a great play there. Therefore, you need some amount of sophistication to be able to understand how to churn your portfolio. And in this phase, and Sakshi made that point correct, if you are only in mutual funds, you know there are big fund houses and very brainy, nerdy guys who are taking these investment calls for you. They are helping you restructure your portfolio, hopefully. But if you are a direct investor, if you're playing with certain amount of money and you are the ultimate definition of risk, and you are using perhaps, or you have invested savings or borrowed capital, then this is an extremely risky period. Therefore, the market lingo that is used, be risk averse. Now, depending on your appetite, your portfolio, you need to be risk averse at this time. But again, if you have chosen fundamentally strong stocks with good governance, with lesser return profiles, that is, in simpler words, you are not looking to triple your capital overnight, then you could say, well, if there is a dip, I will double down. I'm not going to tell you that, a dip is the time to buy. You could just stay steady and calm and look through this. What is the longer term projection? The longer term projection is that minus these external shocks, and if there is good implementation of the central and state budget priorities as have been outlined, including on the central account on infrastructure, you will see a sustained recovery barring a certain dip in demand. So the overall India story, once again I say, minus any negative black swan shocks, should be good. It should go up. But for a lot of people, growth cannot only mean increase in their asset valuations, it also means for a large part of our population, increase in incomes, job growth, job stability. And that, I'm afraid, is not linked to the markets, it's linked to a broader, more robust recovery all across. And we can only hope that that happens minus the all shock.
Absolutely. Thank you so much, Siddharth, for explaining to us what could be the impact in various segments of markets, of crude oil, and therefore the impact on your inflation and on petrol, diesel prices. We must brace for that. That is the biggest takeaway from this discussion. Keep an eye out on that, how the crude oil prices move. But definitely, just like how Finance Minister today said that they're looking at a diplomatic solution towards this Ukraine-Russia crisis. If that happens, then definitely we can look at better days on markets front as well. Thanks a lot for joining us, and do stay tuned on to Business Today for a whole lot more on from the world of business and stock markets. Thanks a lot for tuning in.
Thank you.